Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning September 7th, a brief video that we do for our Twitter and YouTube followers and our members of the Traders News on our website, giving you a little bit of taste of what we give our regular subscribers in the more extensive videos that we do for them every week. But we like to highlight one or two and sometimes three markets that have a good trade opportunity in the coming week. And keep in mind, we don't forecast, we identify trade opportunities with a high probability outcome and acceptable capital exposure. So we may identify a market that's in a position to make a reversal or a trend continuation and a position to be a trade opportunity, but it doesn't trigger it in the following week. That happens often. So let's get started. Take a look at two or three markets for this upcoming week. Well, this is weekly crude oil, the December contract, and oil has finally made a significant weekly bearish reversal, both in the weekly momentums, and it's quite reliable when it makes its bearish reversal or a dual look-back bearish reversal in the weeklies. But more importantly, this is actually a 9-close bear reversal. What do we mean by that? It means this weekly close of the past week went from the week before it was a closing high to a close below the closes of the past 9 weeks. That's significant. A lot of times we have a reversal week. What we mean by that, any reversal bar, is we just close below the prior bar, and that itself sometimes is a reversal signal depending on the price pattern momentum position. But when we have a decline, a wide range decline like this, end close below the closes of the past 2 months, that's quite significant. So we've made a weekly high more than likely. And again, it's just a what we call 1 or A high, so the decline should be a correction within a higher time frame bull market. But that correction should last at least 3 to 4 weeks, and it could even last 2 to 3 months. So it could last for a while. And we'll evaluate that as the market declines and the pattern and the price targets, etc. But you can just sort of begin that more than likely it'll reach around the 50% retracement or beyond, but that's a good sort of standard to anticipate is around the 50% retracement, particularly now because it's right near the lows that were made last June. So let's just round it up and say around 36 down to 34 is the probable price target on the downside in the weeks to come. But it gives you one is if you happen to have oil stocks, anything that's sensitive to crude oil prices, keep in mind that we've probably got the largest correction on the downside in time and price since the April low, and it might not be a time where you want to hold on to those stocks or crude sensitive investments, whatever they happen to be, because more than likely in the weeks ahead or within a month or two, we're going to have a much better opportunity if we identify the end of this correction. This is oil daily. Again, it's the December contract. It shows this significant decline, and our reversal confirmation came on Wednesday when we closed below the close of this little last minor swing low. We hadn't done that in many weeks. So again, this is just the beginning, though. There's going to be some great opportunities on the short side in the days ahead. The daily momentums are dual look back oversold right near the minor 50% retracement. That's a retracement from the June low, not from the April low. So we're about to make a daily low. We should then have, whenever we finish that low, we'll have around a 3 to 5 day corrective advance, but the real high probability trade setup will be following the next cycle in the daily momentum and a bear reversal in the daily momentum to be in sync with the bearish weekly momentum to continue the bear trend again eventually to the 50% retracement from the April low, which is quite a ways below the market, several dollar decline. So that'll be the setup. Probably won't come until near the end of next week, but be aware that we're near a daily low, followed by probable 3 to 5 day corrective rally, and then identifying the end of that correction will be the real setup on the short side. Let's take a quick look at gold, silver, the GDX. I'm just going to look at gold, silver, and the GDX, basically follow the trends and the reversals. I've got a little different wave count in gold than I've had for the past few weeks, looking at gold and silver as if the August high was a wave 3 instead of a wave 5. We won't go into details about that. I had the details with our subscribers, but if you got a little LA wave background, that's good enough. But one of the primary reasons changed it to a wave 3 high is it didn't alter at all the outlook over the next few weeks, but it did what the outcome will be once we make the next reversal. And one of the reasons I changed it is this has just been sideways over the last 3 to 4 weeks, not a typical higher time frame correction, but it's very typical of a wave 4 correction, basically a flat type of correction. And we certainly, when we made the bearish reversal a few weeks ago, is what we look at when we make a momentum, a dual look back momentum reversal, in this case bear reversal. As I say to my subscribers, is we should be sideways to down for at least 3 to 4 weeks. That's kind of the minimum outlook when we make reversals from the extremes, dual look back reversals. That's a key. And so we've just been sideways. And even on a short trade, we're just barely on the positive side because it hasn't been a typical, let's call it an ABC or a zigzag correction or any kind of bear trend. It's just been sideways. That's another reason I'm looking at this as potentially a wave 4 correction. Should have another week or two to go, but this is the alert where I want you to be on alert, is sometime probably after the next week or so, let's say, maybe even 2 weeks, when we make the next weekly momentum bull reversal, that's probably going to complete a correction. And what follows a correction? Well, a resumption of the trend to a new extreme. So we have the potential to complete a corrective low on the weekly higher time frame data, followed by a resumption of the bull trend. Now, more than likely, we've got some more to go on the downside, but this is like, let's be alert over the next couple bars in the weekly data, the next couple weeks, for that potential for a continuation of the bull trend. Here's the daily data, and there's a strategy that we use based on the high and low closes of the past momentum cycle, highs and lows, bull and bear reversals. But basically, we won't go into that detail, but if we make the next daily momentum bull reversal and gold is not closed below 1923.10, we may have completed that correction. So we're going to be looking real close at where the market's at when we make the next daily momentum on our DT oscillator bull reversal. If it's below 19, if the price is below 1923.10, then we probably have another week or two to go to test or exceed what we call the wave A August 12th low. So that's what we'll be looking at. But again, we're orienting our strategies to identify the end of this weekly correction, looking at this as a correction, and then if we can identify when it's probably complete and then identify specific go-long trade strategy, well, that's what we're focusing on over the next week or two. Well, this is the SPX, the cash weekly data. I'm going to give you a little tease on the stock indexes, but not the complete setups that are coming up here in the days ahead. I'm going to reserve that for subscribers, for the paid subscribers, which, by the way, if there's any time, if you haven't tried a trial to one of our DT reports, you might want to check that out now, just $19 from $19 for a full month of our reports. But of course, we had this wide range outside reversal week this past week. What's important is that we finally made from the overbought zone our dual look back weekly bear reversal, and that's quite significant when it's when we also have in the same week traded below the prior week's low and of course made a lower weekly close. So more than likely we're going to be sideways to down for at least 3 to 4 weeks in the stock indexes, potentially for much longer. So we have some really, really key and important waypoints here. I call them price levels that will indicate how significant the decline is going to be Again, that's going to be your tease. I'm not going to explain these levels to you right now, but they have some great significance in the days and weeks ahead. Check out our DT reports. That's it for today. Have a great weekend. Stay safe. Wear your mask. Wash your hands. Keep your distance. Keep as healthy as you can, and keep your friends, family, and fellow citizens as healthy as you can. Take care.